Welcome to Illuminati Silver. We tell it the truth about silver. Today is Thursday, the 21st of April, 2022. And we're seeing some moves in the gold and silver price, unfortunately, to the downside. So without further ado, let's take a look. Well, we're going to jump in straight towards gold and silver to see what's been happening the last few days. We're of the opinion that we might actually see lower prices, which at the start of the week would have been the opposite. Now, if we take note, today gold is down $7 at 1944. It's broken below that key support level of 1950. A number of traders are sensing that we may very well see gold now go down to 1940, and if it breaches that level, could quite rapidly fall even below $1,900. Some even talking as low as 1887. Now, we don't quite see that this week, in fairness. In 2 weeks' time, the Federal Reserve will be making its decision on interest rates and also on its various bond buying programs. So we have to take into account that gold is going to face a number of headwinds in the very near future, although we did expect this week for it to be relatively positive. If we look at this chart, we can immediately see that gold is down $7 at 1944. From the start of the week, it closed on Friday at 1975, so it's now down $33. It fell quite dramatically on Tuesday, started then to build back up yesterday, and is back on the decline today. Now, when we say fell quite dramatically, we're talking about $30 at one point. We did see gold, in fact, at its high of almost touched $2,000, which is what we predicted in the weekly update. Don't be surprised if it just about gets there. Didn't quite make it, but very close. However, this fall is noteworthy. If we look at silver, we can see silver's followed a similar trend. Silver's down 58 cents today at $24.65. Now, on the week, it closed on Friday at $25.68, so it's over $1 lower. And we can see, like gold, on Tuesday, took a dramatic fall, continued into Wednesday, tried to gain some sort of semblance of, shall we say, rebound, but is back on its downward trajectory. And again, we could very well see silver hitting that $24 level if this continues. Though we suspect again this week it might or should hold just above that level. Although we've only got 1 day left. So that's not a great forecast, in fairness. But that said, let's wait and see what's going on today. Now, we have to add that Treasury yields have been quite high, and we're attempting to reach 3%. This is the 10-year yield. Currently, it's 2.85%, attempting 2.9. If that continues to rise, though, then obviously that's a serious headwind for gold and silver. On the economic calendar front, we can see that basically there wasn't an awful lot of info coming out this week, except perhaps for Thursday, Friday. Building permits a little bit better than anticipated. Housing starts a little better than anticipated. Existing home sales a little bit better than anticipated, but nothing really out of the ballpark. Today we've got the jobless claims, which are due, and we also have the Fed, or the Philadelphia Fed manufacturing survey and leading economic indicators. And then the flash PMIs tomorrow. Next week is going to be more interesting simply because we have the PCE price index, and this will be the week before the FOMC's decision on rates. So this week, economic news not having a dramatic effect. But nevertheless, what we did notice, which should help markets longer term, is this comment here: ECB rate at 0 or more by year end, according to Pierre Wunsch. The European Central Bank could lift policy rates above 0 before the end of the year unless the Eurozone economy suffers a severe shock, and it might even have to deploy restrictive policy to get surging prices under control, Governing Council member Pierre Wunsch said. While the war in Ukraine presents a significant risk to the economy, it probably won't keep the ECB from raising borrowing costs to react to a series of unexpectedly strong inflation readings, he said in an interview in Washington conducted on Wednesday evening. Quote, without any really bad news coming from that front, hiking by the end of this year to 0 or slightly positive territory for me would be a no-brainer. And in some respects, for markets, having positive interest rates is not necessarily a bad thing, but it really does depend how high those rates go and what the real rate of interest actually proves to be, i.e., rather simply put, the difference between the interest rate and the inflation rate. That will give you the true real interest rate percentage. Clearly, everyone is worried about inflation, and rightly so. And if we take a quick look at the dollar index, we can see that it is holding quite strongly above the 100 level. By quite strongly, I mean persistently rather than high. So we've got it at 100.08. It did dip today to 99.81, but has been as high as 100.58. And when we looked at this earlier in the week, again, it was above 100. So this dollar index is certainly going to hold on. Now, looking at stocks briefly, yesterday the US markets were up a little. Well, the Dow was up a little. The S&P and Nasdaq were not, but the New York Stock Exchange Composite Index was higher. But all of them at the margin, although the Nasdaq taking a little bit of a hit. Asia Pacific overnight, as far as the Nikkei and Topix were concerned, they were up. Hang Seng down, but European and UK markets at the moment quite a lot in positive territory. So we've got an interesting week this week. We're seeing this downward pressure on gold and silver that we quoted in our weekly update. We're anticipating closer towards the end of the month rather than it happening now. On the sort of general news front, in fairness, there's not an enormous amount of negative or positive news coming out. Putin says Mariupol now under Russian control. EU asks citizens to turn down heating, lower car speeds to cut Russia energy dependence. And we've got US futures rise on earnings boost and bonds slide. That's because of rising rates. However, China stocks plunge as that's President Xi, offers no respite from COVID lockdowns. We're of the opinion that gold and silver will be under pressure, much closer towards the Fed announcement. It could very well be that traders are anticipating this well in advance. We're 2 weeks out. That said, they normally have a sort of more short-term view. So perhaps something is happening in the marketplace we may be unaware of at this precise moment in time. We wanted to raise this with you. We won't produce a video tomorrow, but we'll produce an update. Please tune into those because although we're not producing regular videos during the week, we're putting most of our analysis into the weekend ones for the moment, simply because what's happening is so reliant on what's going on in Ukraine. In fairness, there's very little point anticipating in terms of trends for the simple reason that if Putin adopts even more draconian military measures such as chemical warfare and so forth, then of course that's going to have such a positive effect for gold and silver prices. But equally, if peace looks like it's on the agenda, it will have a negative effect. And that will control far more than the economic news that is coming out. All that said, inflation, 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 and the central bank's responses in terms of interest rates, interest rates, interest rates. That's it for now. Thank you so much for listening. Please subscribe to the channel, press the bell sign. We'll get back to more regular videos shortly when the news and the actual results are a little more volatile and a little more predictable. Until next time. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.